Morning, Steve Freed with the morning grain comments overnight. We see some marginal increases in the beans and corn. Meal's up a little bit, oil's still down a little bit. Outside markets are all lower, stocks, dollar, crude. I think outside markets are beginning to trade a little bit more. Inflation worries after the Fed comments yesterday were hawkish, talking about tapering down the road and maybe seeing a slight increase in interest rates. So that talk has things on the defensive in the outside financial markets. In the grains, I think we're trying to bounce off of maybe an oversold situation. We certainly have taken quite a bit off of the weekly charts in corn, beans, oil, and wheat. In the bean market, I think that the market felt at recent highs. It had begun to ration demand with the lower crush and the slowdown seasonally in U.S. soybean export inspections and sales. We haven't seen any new China new crop soybean sales, which offers resistance to the marketplace. Over in the corn, I think the corn market continues to see some resistance because of the higher 96 million acre acreage estimate, and the fact that U.S. weather over the next 2 weeks will be pretty favorable for crops with normal to above temps and normal weather. Today, NOAA will be out with their 30 and 90-day weather outlook, and that might set the tone for quite a while if conditions are mostly favorable with normal to above temps and normal rainfall. We're still looking for some ridge building in the middle of June through July and August, mostly in the northern plains, maybe in the western corn belt. Over in the wheat market, we continue to see pressure from wheat from favorable weather conditions across the southern plains and some rain forecasted early next week for the dry northern plains and Canadian prairies. Canadian prairies soil moisture levels are the lowest in 5 years, so this rain is needed. We also note that the second day of the Kansas annual wheat tour, scouts found another 56 bushel acre yields in the western and southern areas versus like a 46, 47 5-year average, 49 2 years ago. USDA right now is using a Kansas yield of 48, so that could raise the hard red winter wheat production number and kind of ease a little bit of concern about supply. We're still worried about long-term hard red spring, but also the soft red winter wheat conditions are also favorable. To show you how good things are in Kansas, the tour participants are talking about working through mud because of the wet conditions down there. We also export sales, maybe 3.5 to 4 million tons of new crop corn, 300 to 400,000 beans, 150 to 300 wheat. So again, the corn market is seeing a brisk increase in new crop China export demand because of, number one, they need it, and number two, there's going to be a lower Brazil crop. But again, the acres offset all this demand picture. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.